This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, February 12th, 2016. Euro dollar. So the euro has pulled back a little bit from that recent high that we saw, that fresh 2016 high the other day at 113.77, though ultimately the pressure remains on the top side and the market is now focused on a test of that key measured move at 114.10 over the coming sessions. At this point, given that break that we saw back above 1060 after that 350 point consolidation for several days, the projected upside of 350 does take us up to 1410, so expect to move towards that level in the sessions ahead. Once we get up above 1410 and towards 115, there's a lot of critical medium-term resistance up there, and the broader downtrend could once again reassert. Sterling dollar. So cable is in the process of correcting out from those recent 7-year lows at 140.80, and though we've seen the market pull back a little bit from the correction highs, we've been consolidating and holding above 143.50, which suggests maybe a higher low in favor of additional correction, potentially up towards the 148 area. At this point, only back below 143.50 would put the immediate pressure back on the downside and expose a retest of that recent 40.80 low. Dollar yen. So deeper setbacks in dollar yen on Thursday, with the market dropping all the way into the 110 handle area and ahead of this latest minor retracement. But again, as we've focused on the monthly chart this week, there is risk for deeper setbacks here. If you focus on this chart, that could extend all the way back down below 110 and even towards the 105.45 area, which is really that last solid previous resistance turn support. You can see here a bit of a free fall until we get down to that level. So there is risk for a bit of a pullback that extends more significantly lower. At the same time, the market has seen some pretty sharp setbacks over the past several days, so we could see a bit of a bounce before the market decides to head lower again. Ultimately, though, at this point, any rally should be very well capped towards the 115 to 116 area, while only back above 118 now would really compromise the immediate downside pressure in dollar yen. Euro Swiss. So Euro Swiss has seen some impressive setbacks off recent highs at 112. Those are multi-month highs, but the market is now finding some support by that previous resistance now turned support in the 109.50, 109.40 area, where it could be looking to put in a higher low ahead of a bullish continuation. The break above 110.50 several days back confirmed the end of a range and opened the next major upside extension, which exposes the 114 to 115 area. So any setback should really continue to be very well supported into the 109 area, while ultimately, though, only back below 107.15 would compromise the bullish outlook for Euro Swiss. Aussie dollar. So Aussie is in the process of correcting mostly out from those recent 2015 lows that we saw that were at 68.27. Those were the lowest level seen since March of 2009. But ultimately, the market is locked within a broader downtrend, and so any rallies up towards the 72 to 73 area should continue to be very well capped in favor of a bearish resumption. But more choppy trade could be expected over the coming sessions. Key levels that you want to pay attention to right now on a short-term basis are 71.53 above, and then below you want to pay attention to that low that we saw back on the 9th of February, which comes in around 70.95. Dollar CAD. So dollar CAD continues to consolidate recent declines, and the market is still at risk for deeper setbacks towards this critical rising trendline support, which comes in around the 135 area. So although we've seen a bit of a bounce, don't rule out the possibility for another wave of declines that takes us down to 135 before this market ultimately looks to reassert its broader uptrend and make a move back towards those highs that we saw recently, those near 13-year highs at 146.90. Kiwi dollar. So Kiwi has been chopping around, but mostly the market continues to be very well capped into rallies. The broader downtrend here is intact, and any rally should continue to be very well capped up towards the 67 to 68 area. Only back above 69 would really compromise the bearish outlook here, and deeper setbacks are favored back below recent support at 63.47, below which would expose a retest of the 2015 multi-year low. SPX 500. So the S&P 500 has found some support in recent trade down by those 1811 lows that we'd seen back on the 20th of January. The market did squeak out a fresh yearly low and multi-month low, trading down to about the 1807 to 1808 area, and we could see a bit of a bounce in the sessions ahead, but overall the pressure remains on the downside here, and there's a focus for a break below 1800 to expose a move all the way down towards the 1700 area. At this point, rally should be very well capped now below some key recent resistance, which comes in around 1947. Only back above that level would really take the immediate pressure off the downside. Gold. So gold has been a really impressive performer over the past week, with the market just exploding to the top side, taking out critical resistances at 1192 and then around the 1230 area, trading all the way up towards the 1263 area before this latest minor pullback. But ultimately, there's a serious structural shift going on here since the market bottomed out by multi-year lows at 1046 in late 2015. And the next key topside is in focus at 1307, which represents the 2015 high from January going back quite a bit. So now the focus is really on that 1307 high, and any setback should be very well supported now back towards that previous resistance turn support in the 1192 area.